your phone or something? Because we are live now.
Okay. Oh, right.
Oh, I mean, like I know I can also like check the clock, and then we're going like 1:30, roughly, right? You there?
Yeah, I'm here.
Okay, cool. So Ben, what's up? Um, you
Hi,
suggested
how are you?
you suggested we should talk about global bubbles, right? Kind of.
Yes, more
So
specifically, are we in a market bubble?
and
Question mark.
I thought that this can be like a very technical discussion. This can be a very philosophical discussion, and I just decided to call this episode "Everything is Stupid" because I was literally looking, what should I focus on? Will it be stock markets? Will it be bond markets? Will it be, precious metal markets? And I literally figured out that for the past, the better half of the past 10 years, or like more closely the last 3, 4 years, literally every single
Yeah.
thing you touch in the financial world is like borderline stupid. In terms of
Oh,
where the markets are, like what we're doing, politics, everything, pricing. So yeah, let's maybe start with why you wanted to pick up this topic, right?
yeah. Well, I'll go. I mean, you do need to tell us why you think it's stupid first,
No,
or
I
do you
mean,
want to go into more detail later?
no, I think I will just because I was looking at a lot of things, and I think it would just blow up the hour because there's like so much stuff to talk about. So I thought I will potentially take a more philosophical approach to this, or like what happened over the past years and where we're heading with
Okay.
this. But I
All
was just
right.
like, let's because you suggested the topic. I was like, let's get Ben Elite here.
Okay. All right. Well, I wanted to pick this topic because this is a very exciting time in the stock markets, and prices are going up, investors are coming in, and very high valuations. And the question that we need to ask ourselves when everything looks too good to be true is, are we in a bubble? Hence, I wanted to talk about this topic, and there's no right or wrong answer here. Um, and yeah, what do you think, Thomas? Was it a good topic
I mean, I actually think
or
it's
a
very
hard
interesting,
one?
and I also like how you because maybe it's just my character because I recently met a girl and we talked about astrology a little bit because she's like a lot into this, and I started to look
Okay.
more into this as well, to be honest. But and she said that like from my chart, I'm more like I always find the negative things and everything. So I'm quite excited. It's quite exciting because you just said um, prices are going up. It's very exciting. And for me, it's just like alarm bells in my head because, I just see like the
It's
downside of everything in relation to this. So
okay.
maybe you can enlighten a little bit, what are you actually excited about? Because I'm feeling
I
more, I feel like
I hate to say it, but although I'm optimistic, it does not mean I'm optimistic about this bubble. Okay, I still think that there might be traces of a bubble here.
but, but,
But I would like to say that it's good that we both have different views. I have more geared towards more positive, and you're more towards negative. That makes for a better discussion. But yeah,
I wouldn't even call it negative, man. I would like straight say it's
negative
like
for me.
horror. It's like it's horror, man. Like I'm surprised. But like what? Because you mentioned
Okay.
the term bubble. Like why do you I mean why do you call it a bubble in the first place? Oh, you know.
Hmm. Um. I can't lie. I mean, this is what you see in the news here and there, and does pop into your head. Um, and I think the word bubble comes into mind because of a lot of things. To be honest, firstly, I mean the fact that we are in a pandemic and we are getting out of it, but Mostly because the stock market and economy, the global economy, they don't seem to be on par with each other. Basically, the fundamentals do not seem to be working in tandem, and people ask the question: is this like the dot-com bubble? Is this the precursor to the global financial crisis? And I guess, I mean, this question popped into my head because we've got so much stimulus. The stock market is coming up, and everything seems to be good, but we are still recovering. That something really bad has happened in the economy and in the world, this pandemic. But it just, I don't know if you get me, but I feel like we're just trying to cover we're just trying to cover dirt,
Yeah, and
put dirt on everything that's happening. And the question is, when will
when will the
the
shit explode?
pebble
You're asking, right?
when the pebble starts rolling down the hill and it accumulates into a stone and then a boulder, is that gonna happen? Because I mean, who was the investor that predicted the 2008 housing crisis? Do you remember? There was someone who tried to predict it.
I know who you're referring to. I'm actually not sure of
I
his
forgot
name,
his name.
but I have
Anyway,
but I
but
have
sorry.
recently like Ray Dalio was talking also about the probabilities of a market collapse recently, and also in regards to this, the kind of connection of really the social risk which is inherent this time because the wealth distribution is so far apart. The crisis will have very different,
Mm,
um, I think, consequences. For the higher end of the individuals, and then like for the lower end, because it's like very deep poverty, um, which is potentially ahead. But I think this is why it's so exciting because you are have like kind of this positive connotation to like the current happenings in the market. But even you
yeah.
are like there's something inherently going
I,
wrong, and
I
you
yeah.
mentioned you just mentioned the disconnect between real economy um, and the kind of what we see in the stock markets, which is pretty much fueled, by the ridiculous amount of liquidity which is being pumped in the markets. So,
Exactly.
um, I mean, let's go a bit back to you because I think it's very interesting how you're actually picturing it, and I just want to kind of see. I mean, I don't want to say like your conclusion on this, but your gut feel, or like your kind of
Mm. Yeah. I must admit, I'm a bit more towards. I know, like, I've studied finance. I know I should be more. I should do more research into the statistics, the valuations and whatnot. But I'm a bit more towards a gut feeling kind of person, like you mentioned. Yeah, I am quite positively oriented, but even then, I feel like there's just too much. I don't know how to call it. It's just retail investors coming in, speculating. There's so much speculation in the markets now, and like, I must admit, I'm also one of them. I mean, you can talk about GameStop, you can talk about,
yeah, but I mean, like
but the
GME
thing
wasn't.
is,
I mean, GME was fundamentally not even like GME is fundamentally not even a speculation
so,
because it just like hedge funds were just like caught up cold with their ass up
yeah,
the air, and
okay,
just were like kicked.
yeah.
So
But yeah, I guess right now we're just talking about
oh wait, let me just interrupt because
what
we actually I think actually somebody's listening here. Let's just like say hi.
oh, hi.
I mean, like, do you follow actually our chat because we have a um actually a viewer. That's quite amazing already on the lower side of things here.
Okay.
Um,
Uh,
I mean,
is
if you
that
would
is
open,
that
I mean, if you open our chat as well, you can potentially see what people write. because I think I can just see it on my screen here.
Okay, I don't need to see what they're
Okay.
writing. Later I will.
So, do you want to keep going, or should I just like
No, you take it. That's my take on it. I mean, I guess you asked me why we're talking about this, and obviously we need to. It is an interesting event. There's so many things that are happening in the market, in the stock market, and it begs the question. Like, is there going to be a bubble? Is it going to burst?
So,
Over to you.
when you decided actually for the discussion, I was like,
Yeah.
okay, like what shall we, what shall I pick on? Because there's like so much thing we can potentially talk about. And I was today, when I was working out outside, I met a guy and he started like an internship here, across the river, and
Yeah.
with a bank. And it was quite an interesting discussion because I just figured out myself, first of all, that since like university starting to work, I've never worked in a legit financial economical environment, because I mean I joined pretty much with I mean I started studying post Lehman kind of area, and since then pretty much the market is like fundamentally broken in like so many different aspects. And I talked to this
Well,
guy.
what example?
No, but so I talked to this guy today, and we were referring to like the triple A buckets on like the collateral, which was like defaulting.
Yeah.
They were like literally triple A buckets were like defaulting from like Deutsche Bank back in the days. I think like with 80%. And we had this discussion with him, and he was like super keen and super eager, and it's like his first or second week here in the financial institutions, and he's like, oh, because things which happened like back in 2008, I think the regulations are really good now, and like none of this can happen. And I was just listening and listening, and I was like, and also referring to actually to like my friends at work, that I have never worked in a financial environment where um, the the actual market is like real, because everything what we have seen since 2008 is like a big fuck up. The markets are like not real. First, it starts with bailing out these like big institutions. Then we go into like quantitative easing, like printing endless amounts of money, which lowering interest rates. Um, this is not what the free market is about, and I had never the chance to actually work in like a real financial market, because we have the, as I mentioned, we have the fixed income market, which is like completely rigged with the quantitative easing, and like that companies basically can't default.
Mm.
That central banks are buying up um, like direct market operations where they are buying up debt of like companies. So they are like
Sorry, just to
financing.
interrupt.
Yeah, go ahead.
So what? Okay, can you explain more in terms of the a fake market? I mean, what do you mean
No,
more
because
on that?
I believe like a market should work to an extent where bad companies, just an example, should default, and
Mm.
companies, companies that should reflect, or like stock prices should reflect the value of a company. But because I'm not saying only that the fundamentally the bond market is out of the window, I also believe the stock market is out of the window, because look how many companies we have, particularly in the tech sector, which they don't even have PE ratios. There is like no price earnings relation
Mm.
whatsoever. So
Mm.
how do we go about this? Where we have like valuations which are purely based on expectations of like some sort of either cash in the future or on rising prices. Where is this going? And then we have
Mm.
also the kind of precious metal markets, with gold, and central banks are even not releasing currently how much gold they are leasing, across the markets. And this is why I personally believe this, that I never had the opportunity to
Uh,
ever work in like a proper environment where the markets kind of are not run by unelected people somehow in this bureaucratic positions. So
yeah. Yeah.
it's and the interesting
So
thing,
what? What?
yeah.
What? What? Yeah. What? So what did you conclude from that? what did you? I mean, what did that make you think? Let's say.
I mean, I think that I mean, and this is hard to say, I think, because I mean, it's going for 10 years now, and
Yeah.
when you listen to a lot of economists, there's like this great guy, Hans Werner Sinn. I know he's German, and he's talking like what a bad decision, the kind of whole bailouts of Southern Europe are. Let me just like quickly jump in here. Let's fly to Westphal here on the. You have the spots, right?
Westfall.
Westphal, yeah. Let's fly over there.
1 second. Wetlands, you mean?
No, Westphal. It goes down to Stormwind, and then below that.
I don't have it, dude.
Do you have Stormwind?
Jeez, will we at Stormwind?
Do you have Stormwind or not?
No, I don't.
So you don't have anything.
Oh, when we went to Stormwind, we didn't get it.
I did get it.
Oh my gosh. So where do you want to go now?
Well,
Sorry.
where is your teleport stone?
It goes to Stout Lager Inn.
In where?
I don't know. I don't know. I forgot.
Okay, so
I found out.
So I know exactly where it is. So I fly and you run, I guess, right?
Yeah, sure. Where do you want to go?
To Stormwind or like to Westfall, even further down.
So is
You need to take the train.
Is it wetlands?
No, man. You need to take the train. Remember?
From Ironforge.
Yes.
Yeah, I remember.
Okay. Maybe I just fly with you
right.
to Ironforge and then we can take the train. Let's just go Ironforge.
Okay.
Yeah. So to jump back, I think we were talking about. Oh yeah. So I think, and again, like I think potentially nobody would have thought that this, the state of the markets will prevail for 10 years. And I like to always compare, the current state of the economy, like with a dead kind of patient, like a coma patient, who can only survive because the central banks decide to print more and more money. Any comments on that, or shall I just like keep going on?
Oh no. I mean, go on. Yeah, I get it. I see your point. I mean, that's a whole rabbit hole, right? I mean, I recently, thought to myself, what's money? Like we keep printing
exactly.
it. What like, I mean, I like it's lost some meaning. I must admit, it's hard to explain it. Like what you're talking about. It's like finance, but what you learn is not what you get, and it's and I think it's changing. It's going to change, and that could be the reason why a market would burst. Yeah.
But this is something, I was also kind of evaluating with, because you said that this is like what you learn, but like what you learn is not necessarily what you see at work. And I have to say that, I mean, I don't want to say like, all of my kind of work friends, but I would say like 50 to 60%, I think are to an extent very ignorant. Everybody just believes, or like not everybody, but like the less critical people. Everybody's like, oh, it will be fine for sure. Everything will be just fine. Yeah. While we have, the, money amount, but when you were referring, what is really money, like quadrupled over the last couple of years. And when you look at this, like hard pegs where money was exchanged for, like gold, why did the gold price not quadruple, and this is a, and kind of, this really shows with when the central banks, are leasing out their gold, that they are like manipulating by this, the gold price, just, to give you an example on the manipulation. And this is like, with the low and like low interest rates and quantitative easing, how the bond market is manipulated. And also like all this liquidity translate into the equity markets. And this is when you raise the question about what is really money. I
Mm.
don't necessarily think that, and I mentioned this, I think, like the episode before this, where I said that I generally believe that it's not about, rising prices in stocks or like real estate, but rather to get out of money. You know, money is like short these days. Um,
Mm.
because like what's really happening in our environment is like in this fiat environment, that I
Yeah.
believe the government or the people who are in charge, they could potentially control inflation, because in the end these are the people who print the money,
Yeah.
but they don't.
Well,
I mean,
so sorry. So what? They don't control the inflation,
no,
but
no. I mean,
they could.
they could,
Or
but they don't. They just hope um, that this like kind of hidden. I think. I mean, I genuinely believe that they just hope that this hidden inflation. I checked like some numbers on this, because we have like an what is it called? Like an accumulated, or like on average inflation, technically above 10% over the last years already. Even though
yeah.
the target is like always set by like the central banks at 2%. So um, what will happen in the very near future? I mean, this to the value of money, the extent. I think we haven't seen anything like this potentially since like 1929.
Mm. Okay. Yeah. I mean, it begs the question, right? Like, because gold is not pegged to the dollar anymore. I mean,
Yes,
and it's just being printed. Um, I guess. I mean, this is a whole different discussion as well. But this can also be related to, I mean, the economy potentially breaking down in the future. I don't know. I feel like there's some kind of intervention that needs to take place.
but
And once,
what would this intervention
and
look like these days? What can
I,
you do without
I
fundamentally breaking our society at this stage?
honestly, the way humans work is we always learn from our mistakes. So trust me, the
Do
only
we?
way an
Do we, man?
intervention will.
Because I feel like we're doing over and over, starting with the old
You,
Romans, like we
you know
always do
what?
the same mistakes.
You are right. Actually, it's like I feel like, when you said that the markets we're living in are not really right after the global financial crisis.
Yeah,
When you said that just now, it feels like what you made me think was that after the crisis, someone just took some band-aid and just slapped it like on the economy, and that band-aid is gonna break because, I mean, you just try to fix it, right, with all this monetary QE. And so I don't know.
you see, because
I do feel like something is going to happen.
I mean, you call it
But
fixing,
yeah.
but I think I wouldn't call it fixing, because, just by the way, let's fly to Westfall. You have the point, right? Or not?
I do.
Okay. So I was thinking about it, and I actually don't think it's fixing really, because they would have fixed potentially the markets, and the euro would have broken up most likely. But this would have really
Mm.
fixed the market. But because there was like a political ideology there that certain people, or like certain interests wanted to have the euro sustain. Because of that, they broke the markets, because it was
Mm.
technically not necessary to do so. But or like in a let's say in a free market economy, this wouldn't have happened. But there was like, and this is what I'm saying, what's happening right now in other markets as well. There's like a political will of people who are in charge, who are in power, that this structure benefits them. But this again is fundamentally rigging the. I mean, I don't want to compare, our current financial system to, the Soviet Union or something. But if you
Mm.
can, you think of like one market which is actually really without intervention for like the last 3 years? Because even
No,
even
I don't.
fucking even sorry even freaking equity markets with Robinhood, dude, like what the fuck happened there? When they suddenly a broker says, oh yeah, by the way, I'll sell your shares for you because it's a danger, to the market.
Oh my gosh, I was shocked. That was. insane. I was like, what is that? And you're right. You're right, Thomas. You're right. Oh yeah. Um.
You know what are
You know.
what are these regulators doing? You know, they are not, and this is what I'm saying. It's the same with the with the kind of gold market, where like you have to imagine that like currently central banks are like not willing to release any information again on their like gold leasing. So
Hmm.
it's like if we were because people still claim that we're living like in a democracy, we should have the
Hmm.
right to know what actually like this fundamental state organizations are doing, but nobody knows.
Hmm.
Nobody from the Financial Times, from Bloomberg, nobody's touching these topics because, as you said, it's there is like something under the surface.
Uh, yeah, it's a whole different can of worms. But actually, I've got a question for you,
Yeah,
Thomas. Just back, quite focused on our topic today. How we talked about fiat. We talked about our financial markets. Even like, are they even real? I mean, which could potentially one day lead to the bubble bursting when investors and people realize that it's just it's fake. Let's put that word out
yeah.
there. But how would you determine what a bubble is? Do you look at indicators? Do you have anything in mind?
I mean,
Um,
I
or
think.
are you taking more of a broader approach to answering this question? Are we in a market bubble?
I mean, I think what we learned potentially from 2001, even though I was like very young, and it was more like something we kind of had like an historical approach to. I think particularly for what is this? Particularly for the stock markets, and I mentioned like PE ratios before, where you have a lot of companies which are raising a lot of money, and we could refer here also like to the whole spec kind of acquisition type vehicles which were like placed in the market over the last year, um, where valuations don't kind of resemble the fundamentals of companies, particularly for the equity
Hmm.
markets. This is something I mean I like to look at, and this would be like one indicator, just like straight out of.
Okay.
Um,
Okay. Okay. Um. So okay. All right. That's your
I mean,
your
this is like
your
not.
indicator.
I would say. I mean, this is like not an exhaustive, but for. I think it's also interesting to look, um, like when you look at precious metals, and you have,
Yeah.
the kind of something is here. It's silver and like gold, and then when you see like how much money was actually created over, you can see this like on the balance sheet of the Fed, and like when the prices for precious metal like don't adjust.
Yeah.
This is like another thing which I think is quite interesting, and then also potential like yield curve, so liquidity short term versus like long term lending, when
Yeah.
these flattens out. Um, I,
Okay.
I think,
Okay.
I mean, potentially, if I would, have to come up with something else, is also when you look at like sectors, particular where
Mm.
I mean, now it's the whole thing. We had 2001, the whole like bubble with stocks and internet companies, and I think if we look now at, because I think the next part of the web is the whole blockchain space. And I don't want to
Oh
say that
yeah.
the blockchain is
Yeah.
like any bad, and I don't want to say the NTFs are bad in general. But I think this is a typical, let's say, a typical aspect, which also happens that like a new technology um, is being like hyped to an extent.
Mm.
But again,
And
yeah,
and does that determine a bubble? Do you think?
I mean, I don't think it really
Do you
needs.
think that would be a bubble?
In particular, like the blockchain assets, or
Oh, like I guess like sorry, you were saying that as many people get into it. I thought you were possibly going to say something like a lot of people go into it and it becomes a bubble and that might burst because the valuations are too unrealistic or
Um,
um
I mean,
no, because I was thinking, go on.
I think from let's give it like more like behavioral financial touch. It's also I mean, this is quite funny because I remember reading a book like 100 years ago. Costolani. He was uh, like one of the grand gods of like the markets almost 100 years ago, when he was
Okay.
saying that like if you people who have like nothing to do with the financial markets, when they give you advice on which stock to buy, you should know that like something is also fundamentally wrong, because everybody is kind of invested, and
Okay, okay.
so I think, and I think general like the democratization of markets, what we see with like these retail brokers is good, but I think it might be
Yeah.
potentially also a kind of um yeah, a parameter for a spike in the market. Even though the actual
Yeah.
constitution of the markets these days, it doesn't really matter if investors would pour their money
Well, I
into
need to
Apple. Yeah,
turn
I see. I need to fix you here. It wouldn't matter if they would
okay.
pour money into Apple, because retail money is like way is like not enough to actually impact the prices there. Like institutional money like
Mm,
grew by such a big amount. Um, yeah.
okay, okay. All right. No, I'm just surprised you didn't mention Warren Buffett's indicator or Ray Dalio's bubble indicator. Have you heard of them?
Yeah, I mean, I've read the Big Debt Crisis. I think he's referring a
Yeah.
little bit, but you can like explore a little bit on this if you want.
Oh no, I mean, I guess Warren Buffett's indicator is just looking at the ratio of U.S. company market valuations compared to the size of the country's economy, and if this is high, if the U.S. company valuations are higher, then this is not a good sign.
But I mean, we are like at the
Um,
highest company valuations ever right now, right?
exactly.
It's like,
So, I mean, this we're looking at Warren Buffett, right? He's obviously the oracle,
I mean, he
and it's
actually,
flashing red.
yeah, but I mean, he was
Um,
actually also, I mean, weeks ago already, he was, going into like Barrick Gold, and I think this also spiked a little bit then the whole movement into like gold mining again. Even
okay.
though he's actually Buffett hates gold because it's like not very
Oh, I didn't
productive.
know he hates
He
gold.
hates gold, and he thinks the best inflation hedge is actually companies and stocks to an extent, because companies can
Mm.
rise prices when inflations go up. Can you help me here, quick?
Yeah, 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 yeah,
Because this
yeah.
might be a problem.
Um, uh, 1 sec. How do I get a?
So I'm actually not aware exactly what. So Ray Dalio is measuring valuations against, what did you say, economic output?
Sorry, that was Warren Buffett.
Okay, and what is Ray
Um,
Dalio doing?
Ray Dalio has six tenets or six principles which he looks
But
at.
this is more like is it
Uh,
just like like a linear model? What he's doing, so he has like six coefficients, and then around this he like with different weightings, and then it gives out the
oh
certain.
no, no, no. I don't think so. Actually, I think they're individual. They're not in any sort of model.
So they're like not have any
Um,
weightings to them.
no, no.
So do you have them, by the
Uh,
way, or do you know what they are?
yeah, I do know what they are. I mean, if we want to look at Ray Dalio's principles, first principle is looking at how high stock prices are relative to traditional fundamental measures of value,
Okay, is he accounting?
like
Yeah. Okay, go ahead. Go ahead.
EPS.
Yeah,
EPS or book value per share.
that's
So
interesting.
to give an example, on that, this is the first out of the six. The example is U.S. stocks right now are very, very high relative, to the past 100 years.
Oh, yeah, 100%.
So, I mean, that's one example. Do you want me to move on to the second principle? Do you want me to talk about all
I mean,
of
yeah,
this?
let's go through
Quickly
this.
go through all of it now.
Yeah, and I think we can maybe talk about it because it's quite interesting.
Yeah. So I'll just quickly state them. Okay. So
Yeah.
the second one is prices discounting unsustainable conditions.
Can you repeat that?
Prices discounting unsustainable conditions.
What are how does he define unsustainable conditions?
To give more example, this involves assessing company earnings
Yeah.
growth rates required for the stock returns to outperform bonds, I think.
Yeah. I mean, makes
And
sense. Yeah.
on the basis now that US stocks are a bit too high, and because super low bond yields are just hardly difficult to beat. I don't know if that makes sense.
Yeah. So he's pretty much comparing debt and equity side more or less, right?
Yeah.
With
that
yeah,
sense.
interesting. I think I heard about this. I'm pretty sure he wrote
yeah,
about
it's
this.
very popular. So yeah.
But when we talk about this again, right? Why are bond yields so freaking low? Because the whole bond market is rigged. Because it's
Yeah.
Go ahead. What's the
I
third one?
get that. Yeah. Sorry, and just to go on to the third one. This one is it's slightly less technical. It's just to see how many new buyers are entering the market.
But how is he determining? How do you figure out the data for new buyers?
Oh, I mean, this is easy, I guess, in a sense that you just look at how many invest. Oh, I was following somebody else. Where are you? Sorry.
Because how do you determine how many new buyers you have in the market?
I to be honest, I don't really know, but I don't think it's really. I think you just. I think we're just looking at retail investors here. To be honest with you, I think we're just looking at investors who are just coming in.
So it is like the old Costolani was referring in the past. Well, with people who necessarily don't have anything to do with the industry start to get in.
So sorry. I'll just give a better example. For example, is there a rush of new entrants? Is there suddenly an influx of people just coming into the market?
No, I understand this part. I'm just curious, where do you get the data on this indicator?
Oh, I would have thought that any research company would.
Okay. Yeah, but maybe there's people
like people coming in to sign up for brokerage accounts.
Yeah, or maybe just somebody
that kind of thing.
Yeah, just somebody just phone calls or something when they're calling you and asking you all these questions.
Yeah. So easy things like that. I think there's nothing too complicated in that sense. I think.
Yeah.
But I do not know how they calculate how many people are coming in. But I think it's just, I don't know, maybe Robinhood accounts,
I mean, this is also ridiculous.
Coming into it.
Because Robinhood was selling actually trade flow, to Melvin Capital. Because Melvin Capital is, I don't know, through a venture capital vehicle was backing Robinhood, I believe. So
it was selling trade flow.
Yeah, so it's one big freaking scam.
Sheesh. Okay.
And I think also, I'm not sure, but I believe Robinhood is going public now, right? They at least said. I found it on Twitter, I think 3 days ago. And you know what's the most funny thing about it? And now you have to wrap your mind around it. Because Robinhood said, before they're going public, as a broker, that you will be not allowed to short their stock on their platform.
Oh.
Do you get behind this? How ridiculous this is?
Yeah. Yeah, I'm trying to grasp it now. I mean, that's a bit disgusting.
It's like, let me just quickly check because I had on my
I
Twitter.
didn't. I didn't know. I didn't know this was happening with Robinhood. Yeah, I need to actually look at it.
I think they are.
Was it recent?
Yeah, it's like last 3 days because I found like a super. I'm just like checking my Twitter here. Give me a second because it was
Okay.
somewhere. Let me just see where it is. No, no, no. I'm following like an Asian guy and he's like making always the funniest memes on this.
Okay.
But I actually,
Does he have a name? Ooh.
yeah, is. Give me one more second. Tell me here. I think
All
he's
right.
at.
I'll just.
I think he's at Still Gray or so. Is his? He's tweeting all a lot of different stuff. But I mean, this is like you're not allowing, even though you're like. I mean, I tried to even find like a like a ridiculous example for this. What this technically means, with like a very basic kind of corporate comparison for like which is completely not financial. But if you offer a service to buy and sell stocks and then you ban the short selling of your own stock, I mean, this is like pretty much undermining your whole purpose, right?
Yeah.
It's like so odd.
Yeah. But is that even allowed to some
I don't know. This is also when I read
certain
this.
extent?
Yeah, I mean, first of all, when I
I
read this, I
mean,
was like, "Is this actually for real, or is
like,
this just like some Twitter joke?"
is it fake news or?
No, I don't know. But I mean, what the thing is, if I would have heard this about like a different broker, like Fidelity or so, I'll be like, nah, it's like they are like serious. But after what actually Robinhood did with GameStop, I was like, dude, this like I
Yeah.
can 100% believe that these guys are gonna do that.
Yeah.
Yeah, but let's.
Well,
I think we were at the third one where you said it's sentiment,
so
right? Or like the kind of new participants in the market.
yeah. Sorry, I was in the third one. I was just looking at the quests. So yeah, going back to it. Okay, I was in the third one, and the fourth one is how broadly positive is investor sentiment. So I guess if it's too bullish, in the market, then many investors would have, I guess, already invested everything. Meaning that they're more likely to be sellers than buyers.
Yeah.
Does that make sense?
No, no. I mean, like,
That is
I'm just
so
also
basically that is how positive investor sentiment is.
I'm just also curious,
And
with investor sentiment because it's this is also like a subjective. It's not really. I mean, obviously they kind
mm,
of objectify this with I think past trends, but this is like nothing you can get anywhere from. Um, it's just like not pure market data. I think there's like algos these days who also like trace this kind of sentiments towards stocks. But it's interesting.
yeah. I also still don't really understand this though. I mean, the question is looking at how broadly positive is um, investor sentiment. Like, so how does this mean that there might be more sellers than buyers? Um, does that make sense?
I mean, if there is more sellers than buyers, um, the sentiment is technically shifting to the negative, right? Because you always want to have more buyers than sellers, and prices go up.
Yeah.
I mean,
I
technically,
guess
it's like if you
I'm
go
just
into
trying to
the
work my way around it.
if you
Yeah.
go to the nitty gritty of it, it's more like you
Mm,
always need the exact same amount of buyers and sellers to actually fix a price, because you know.
exactly.
But
Yeah.
yeah, if
Exactly.
it's more buyers than sellers, prices should go up.
Okay. Okay. Um, yeah, and then the next one. Oh, this is a very intriguing one. Are investments being financed by high leverage?
Oh yeah, man, this is a classic.
Um, yeah,
So
yeah.
this is
And we can say that everything is being freaking leveraged.
no, but I mean, just yesterday, the what is it called? The Tiger?
I
No,
mean,
yesterday or 2 days ago, the Tiger Cup blew up, right? they are called different now. Let me just check what they're called now.
What?
I think they're called Archegos Capital Management. You know, it's the guy from like the Asian tiger hedge funds. They were like, dude, they blew like a $10 billion hole into Credit Suisse, or I think it was Credit Suisse. They like prime brokerage accounts like exploded.
What? Why do I not know this?
Let me just quickly check because I was reading on this.
Maybe,
Bill Huang,
go on.
man, Bill Huang is his name.
Actually,
I
I
think
think I've heard. I think I've heard it. I think I've heard about it.
Yeah, so this is the nonsense
It was a
what's
long
going
time
on.
ago.
You know, hedge fund, now family offices, leverage like, I don't know, leverage like fucking, I think he has like, I'm not sure now on the numbers, but I believe he was like 5 billion capital and he was like, I think leverage was like 30 or 50, you know, all these positions. And usually in bull markets, people use shares, you know, to take loans with these investment banks. So let me just quickly check here. No, I don't need any of that. So yeah, he blew up, over leveraged, I think. But it's not only, I think, companies, and I think like financial institutions in terms of leverage, right? Yeah.
Sorry, can you say that again?
No, I'm saying like
I
not
was just
only
looking at the device.
corporates, but also like financial institutions are being over leveraged. But you know, with the leverage, the actual nasty thing about it is that if you look at the distribution, you know, of ratings of the rating agencies, you will find a lot of investment grade. I mean, if you just look at the particular around the investment grade, you will see that obviously there's like, you know, triple A's and all this kind of stuff, but a lot of the companies are in the bucket which is just above, you know, junk grade. So they financially engineer their balance sheets that they are like technically still investment grade. So, you know, like big insurance companies and all those like companies who have like certain mandates, that those companies fall into these mandates. So like their stock prices go up. But, you know, if something shifts in the market, their financial engineering doesn't change the fact that they are like, you know, not prime, but rather junk grade. So this is another part where like the leverage is like a very, very sharp sword, which can cut both ways, I guess.
Okay, yeah, I'm better understanding what you're saying now. That's very interesting. I've never thought about it that way. But yeah, to explain more on the point, I guess, you know, I mean, if more people are trading on margin and or leverage products like, you know, these brokerage trading websites, they are more vulnerable to be forced to sell when when there's a potential downturn in the economy.
Oh yeah, I mean this is what happened with
And yeah,
man, the Tiger Cup. I forgot his name again. Juan, the guy I just mentioned before.
yeah,
Yeah.
yeah. I mean, options as well, and
Oh yeah, because
other things.
he was
Yeah.
also like you know, doing the typical financial alchemy to you know, take these positions in these companies. So it wasn't just like plain stocks, but you know, rather options and like futures and all this kind of stuff. So yeah, he's gone. But it's interesting how like one of these companies, you know, can cause such a distress across.
Yeah, I mean, it's. I bet he's going to cause more regulations to come into play.
You see, you're like, this is what I mean, man. You're like such an optimist with this stuff. You know, I just like don't see any of that happening because what you were mentioning before, you know, how do we get out of this? And there was, I think, in the 80s, it was the I think I don't sure if he was like the Fed guy or he was like the finance guy of the U.S. government, but he literally raised raised the rates, you know, to 20%.
Yeah.
To kind
I
of
don't know.
to kind of you know, stop the markets a little bit to like cool them down. And I think, when you would do this kind of operation these days, where you would just like raise rates from like um, pretty much 0 to 20%, it's not just that like stock markets would collapse, companies would just like collapse, house funding, mortgages, everything would collapse. I think it's more about, and this is where I was starting the discussion in the beginning. We would actually see um, like social unrest to an extent where we would have like such a redistribution of wealth, um, which is insane. And this is where I think that we can't, or like the central banks are aware of this problem, and this is why I think they are not going down this route where they just hope we will silently, cause an inflation, tax our citizens, and hope that nobody will figure this out.
Mm.
Because this is like such a. I mean, just imagine if rates would go to 20% tomorrow. What this would not only mean. I mean, I think at least here in the UK, I think everybody would default on his mortgage. At least everything what is flexible finance. So, and this is why when we're talking about the bubble, this is when I think I don't know how this will end, but I think there will be like a kind of idiosyncratic shock, something very like marginal. Nobody will be thinking about this. It will be like these kind of things where, I don't know, the wife of like one of the hedge fund managers will like overdraw her like freaking credit card, and this will trigger something in a prime brokerage account, and like one big bank will collapse, and like this kind of stuff. Because I don't think that these are like the typical, like, I think, like kind of black swans.
It's systematic.
No, where this is like something where we just like didn't account for, but like we have such a broken everything. Again, like everything is stupid. That I don't see any other way out of this. But it's gonna be painful, man. Like this is gonna be fucking painful. There like will be unemployment. Companies will go bust. And you can maybe because again you're like an optimist, you can maybe draw a brighter conclusion on this.
I feel like it just on a slight tangent. I feel like do you think the cryptocurrency market can survive a market bubble burst?
I mean, this is.
Oh yeah, the question is I'm looking for silver.
I think this is very interesting that you asked this, because I have seen a comment of the German finance minister. I think it was last year, and he actually said that he doesn't want to give away the state's monopoly on money. Like so on the, and he in particular mentioned bitcoins. And
okay, so
I think I think this is exactly, we have like 6 more minutes. This is exactly what I think this whole discussion is leading towards, that we have a disconnect here, between the general long-term benefit of society, I believe, for like a redistribution of wealth, a redistribution with wealth, also of power, and a minority of, partially elected, partially not elected individuals who are running, these decisions, and their decisions are in their own best interest, because with this system, or like with this wealth distribution right now, they can draw on a lot of powers, just based on like how things are distributed through society. But it is not in the best interest of the society in the long term. So, and by him saying this, that he wants to, kind of control the the narrative, or like
it reels a lot. Yes.
On like money, because he knows that like once the central banks lose control over the supply of money, their power goes from one day to another. because then people might shift, to cryptocurrencies or to silver, to gold, and this is I think this is like a paradigm shift. But I think this, from my perspective, this will come. Either it will be tomorrow, in a week, a year. Potentially, 10 years ago, nobody would have seen that we are 10 years later still in this shit. But
Mm.
I think the sooner it happens, the better it is, because the longer we wait, the worse it will get, and the worse the consequence of this will be. So to answer your question, I think that cryptocurrencies have a very big potential um, to bridge this period of uncertainty which will come with such a downturn.
Mm. Okay. Yeah. That's a good point. I guess
But
as we're going
but
closer
also,
to
just
go on.
to jump into this, you know, because maybe we're just like developing as a society. Who said that power needs to be centralized around like central banks?
Mm.
Why don't we have because it's just a mean of exchange. Why don't we let the kind of society come up, or the market come up with a solution, with the best solution for
Mm.
a mean of exchange?
Yeah, and that's a topic for a different discussion, and that's actually a very good point because that could be the answer we're looking for. Uh, let society determine the best mode of transacting. Um,
Yeah, I
but
think it would be liberating, to an extent.
yeah, yeah, yeah.
Because now all we are like in this cycle, going on from like one stimulus package to another, and like more money, and like more like kind of um debt is being bought up, which is like potentially already defaulted. If somebody would actually check the balance sheet of the of the central bank, like what kind of debt they have on their balance sheet, man, like this is just incredible. I
Yeah,
think there's like so many defaults there,
yeah, yeah, yeah.
and they just like print this money, to
Um,
like refinance the old debt. And this is like, this like can't be the purpose of like, how long can we go on like that?
Look, when that happens, hopefully I would have a safe haven of assets. Uh, Bitcoin and gold now, I guess. But yeah, just to add on, I would say that one of the few ways that few ways that you can spot a market bubble um, is to watch out for uh, late cycle economic booms. As we round this up with our are we heading into market bubble? I guess the best way is to look for them, and if borrowing money becomes more expensive and economic growth starts to slow,
But you see, with this is
time.
all, and I had discussions with my work colleagues on this. This is all. I don't want to say this is like all theory, but like
Yeah.
these approaches only work when the assumptions that like markets are actually, to an extent, let's say like semi-efficient, or that markets are
Mm.
like unbiased. I think this
Okay.
works when you
Okay.
check like the
Okay.
economy. But what we see right now is like
What would work then? What would work? What is your opinion on what would work?
like this is what I'm saying. I just see that the objective, perspective, that everything is like not. Prices are not determined anymore by markets. There's like so much regulation going into this these days. There's like so much interventions going into these days. Like everywhere are interventions. You know,
Mm.
I don't think we can measure these type of things with with like, I don't want to call it like old school economic theory.
Yeah, I
But I
understand.
think like a lot of these rules, which were like made up or like tested, back tested in like normal economic circumstances where markets were actually like meaningful, I think a lot of this stuff doesn't apply anymore. And
Okay.
I think what will happen is that as soon as the street realizes that their living costs, the rents, like what is it called, electricity, power, like prices, their gas prices, um, if they start to like skyrocket, they'll ask themselves, what happened to my, what happened to my, how is it called, like life insurance or whatever, like all the like this
Mm,
fixed asset will just like they will be nominally there, but they won't be worth anything. So I think
mm,
this is the potentially a way where things become normal at a huge cost though.
mm.
So I'm
Okay.
personally to like wrap up because I think we're running a little late now.
Okay. So just to wrap this
Oh,
up,
that's a big iPhone call
yeah,
there.
yeah, yeah. That's just to remind us, And I guess the question we need to answer now is, what do you think, Thomas? Are we in a market bubble? And we will conclude from there.
You see, I don't want to call it a bubble
You got my attention.
because I
Here,
actually
there.
call it,
It's
and
good.
I think this is my thing now. I call it just like, I mean, can I call it everything is stupid?
Yeah.
Because obviously it's a bubble. I think, but it's not like with a bubble we've seen before interventions. We have like this, but also can't say that like we are living in a kind of communist planned economy kind of thing. It's
How are you?
No, we definitely are not.
you see, you're
Okay.
saying we definitely are not. Like I'm not so sure about this, but I think we
I
I think it's
yeah.
no, I think I don't want to call it a bubble. I think it is a bubble, but I just think it's everything is stupid, from
I
my
feel like
perspective.
it's a bubble. It's a bubble that can survive in a very weird sense because everyone is in on the game.
Yeah, but like
Everyone,
this is the man,
government,
but like
regulations.
this is like the key to like that it will like not not go like forever like that if every like what you just said, because everybody is in there.
Yeah.
Like this is the best way to explain like why it's not going to work, I think. But yeah, so just like to, okay, we're like 1 hour 2 minutes, so your call on that, bubble or not?
Right now, no. Right now,
Oh my
no.
god, that's amazing. I would have never thought that this would
Right
be the
now,
conclusion that you say now after all this
no.
discussion. It's not a bubble.
No. Right now, as much as it looks like a bubble at this current moment in time, I do not think so. In 1 year, at the end of 2021, I have a I have a gut feeling, and a sense that depending on what happens, then it could potentially be one. But only time will tell.
I mean, I hope, let's put it this way, I hope you're right, but I doubt it. I doubt it very much, man. Okay,
I
let's make
hope so.
maybe the buy here.
We meet again.
I don't know, for
Goodbye.
tomorrow and 2 days. I think we should catch up, and this was very exciting
Yes,
today.
yes,
Actually, the topic, man, I liked it because it was good.
yeah.
Okay, cool. So I'm just like finishing
Oh,
the recording.
oh, are we still?